here we are. We got an ultra short 500, and we have the SSO bull 500 related to S&P both. Okay, so when we put the bottom here in, we knew that the calendar year 52-week low came upon us, and boy oh boy, we got in there quickly. And same thing over here. But how did we know? Well, let's look at the facts, MMTs. We do know one thing for sure, that we have that double top reversal. That's how we knew that this was going to hold, and how that support level was going to hold, because these resistance levels, and we were starting to reverse here, and we couldn't take out this whole area for several weeks. As far as the topping part of the ultra short ETF S&P 500 bear, and the bear was up here for several weeks, 1 week, 2 weeks, 3 weeks, 4 weeks, 5, 6, 7, 8, 9. But at the same time, over here on the index of the S&P 500, right here in this chart, that's what it is. Let us not be confused. Okay, and let us not be confused that at the same resistance levels up in here, as you were taught live every day, you were here, and you were putting bottoms, and you were doing short trades every day, and you were doing long trades, and you were going through the cycles until you finally hit a major double top, lower high here, and you put in the lower bottom here. And at the same time that that was happening, both that index and the options up and out of the money and above that 50-week moving average here, we closed above the 50-week moving average on the S&P. Yeah, we did. We're 3 weeks above the 10-week here. We're 3 weeks above the 10-week here. It's pointing up. That's a bull case. The bear case is the opposite. You're below the 10-week. They're declining in value now. As far as the calendar 2011, the bear is coming all the way back down here on the S&P to test its lows now. And in the shorter term, we're coming up here and we're hitting some resistance levels that we can talk about. Remember, you already have it done in your MMT platform, what to go by. But this is the neckline reversal up here that we did all together, shorting S&P using S&P 500 index options and how well they paid. And then we got calls in here, and then we had to buy puts again. And we were calls on and puts on. And then finally, ultimately, the year-end rally and the big short squeeze here has brought us upon this level, as you already know. We're just using it because that bull is burning off the bottom, and that's a good trade. $35 on the low end, 48, almost 49 up here. So buying, holding at certain times, and selling short here. And we're at the bottom, so we're at the wall of resistance right now. You're going to have to do just like the S&P does, that the ETF is going to have to close above the 50-week, just as it did here. Okay, you're below the 50-week and 20-week on the bear here. Now, moving forward, you'll be long and short both. If we're to hold the calendar yearly low support levels, then we're going to be putting in the 4-week topping resistance levels on both of these, should that be the case. If we break through there, we're going to break higher here, and we're going to continue to break higher in the index. Let's let that be known as far as how to apply bear and bull, and also understand that if the bull keeps breaking through here and going higher, that stocks intraday are going to bounce off that support level and continue to go higher. Let us remember that 90% of this rally has been all about that European stuff again, and it's all about that perception, but most of the bulls have said it out. They are not involved because they've been waiting for a pullback that hasn't come yet, and it happens like this all the time at 52-week major lows in indexes, major 52-week lows in bears at times. The bear at this time was never wanting to break, and it would rally up, pull back, and then rally higher. And then, of course, during that same phase, you were reversing over here, and the bull was going down. And short here, long here, short the bull or the bear, and long the bull again. And the S&P 500 index right here plays a major role at calendar years. What we would like to do is empower you in directional price movement, as we always do, on a daily compounded level, Monday through Friday, live market hours, live entries and exits, and trade management, diversified bull, bear, indexes, individual equities and leaderships, and how the indices are setting up, and everything across the board, so that one could know when to be the bull, when to be long the bull, when to short the bear, when to short the bull, and when to be long the bear, and how these things work hand in hand together along with the fear indicators. I'm just giving a brief update on these two instruments. Here's a resistance level. Your S&P is above it, and here's your support level. Your support level is here on the bear, and it's a weekly calendar yearly 2011 low coming into play. So 4 weeks down and 4 weeks up, and now we're going to trade it all the way around. Once again, getting diversified with ETFs, getting diversified with indexes, equities, index sectors, index, everything that you would need to know, that in the individual components, technology, the banks, the semis, you name it, we cover it. You know that you will learn how to trade accordingly to where that power momentum is, as always, at every calendar yearly low and every calendar yearly top, and what it's been about. And the earnings season is winding down. Bear, bull, index right here, S&P 500. The thing about it is that this is a major support level that can never be overlooked, because this is a major resistance level. If you break the resistance level here, you're going to break that support level. And then we'll talk about how we could rally up here and test the high of that bar and ultimately get into a 55 area. That would be a double top. But you're going to have to break through here. But you're going to have to break down in the fear. Let's do it on Monday.